So the Federal Reserve just lowered its key interest rate 25 basis points as expected. Gold price, though, did not react as expected. We should probably take a look. Okay, I don't know which one of you wanted a sale in gold today, but we're definitely seeing it. The U.S. Federal Reserve Committee just decided today on a 25 basis point cut. Now, that lined up with the expectations of pretty much everybody. 96% of traders, according to the CME FedWatch, were expecting this same cut. So no big surprises there. That decision was already priced in. There was a surprise, though, in the talk of what happens next year. The Fed's dot plot shows only 2 cuts in 2025 when most people were expecting 4. And that's where things change for the price of gold. Now, before we get into what actually changes here, we need to take a quick look at the year to date because this is significant and we don't want to lose sight of what's important. Now, gold is having a hell of a year. 2024 has been the best annual performance since 2010. The price of gold is up 29% this year, and it hit an all-time high of $27.48 this past October. That is not typical performance for gold. Now, what we typically see in the minutes following any surprise news like this is a quick knee-jerk reaction in the spot price as traders change positions, and then eventually it smooths out. So I won't even comment on the price beyond saying, yeah, we saw an immediate drop of 1.5% in price, and I expect that at least some of that will smooth out, will rebound by the time this actually goes live. Regardless, though, this is an impact that's probably going to last the rest of this year, and it will start 2025 out a little bit differently than most were expecting. Now, if you want to take advantage of today's surprise dip, I've told you about channel sponsor Summit Metals. They're a great place to do that. They've got gold and silver at great prices. They have fast shipping, and they're just really nice people. So give them a shot, summitmetals.com. Now, getting back to what people were expecting for 2025, well, Goldman Sachs is still predicting $3,000 by the end of 2025. And I'm going to give them credit for basing it on actual reasons. And that would have been an 11% gain from where we are now. Today, it's actually more like a 14% gain. And this at a time when gold has a lot of competition from other assets gaining from Trump policy expectations. We also can't ignore that the US dollar has seen a sharp gain on the DXY since October. It's up 6% on the year now. Now, a big reason Goldman was saying gold continues to run is Federal Reserve policy. We got a little bit of a surprise to that today. Goldman was predicting significantly lower interest rates in 2025 with an expectation of another 100 basis points. Now, the dot plot matrix is now signaling half that. That would take the Fed funds rate down 0.5% rather than a full percent to somewhere between 3.75 and 4. And if you were curious and these were out of focus, these are 10th ounce Eagles, Maples, and Britannias, by the way. Goldman is also pointing out that a stronger dollar will encourage central banks to continue to buy gold. The idea being that other countries are looking for alternatives to the US dollar reserves. Sanctions against Russia, that would be another part playing in here, of course. So they're predicting an average of 30 tons of monthly gold demand from central banks through 2025. That's kind of a weird number because 360 tons, that would be about half what central banks bought the first 3 quarters of this year, 2024. Now, one more thing that Goldman is pointing out is that the stronger dollar, it's not just about how great everything is in the U.S. It has a lot to do with turmoil everywhere. The U.S. just seems like the least tumultuous of the bunch, maybe. Best horse in the glue factory. Now, add the threat of a little bit of a tariff shock, and 2025 is looking to continue to create waves, or sticking with the horse analogy, to buck a little bit. And the assumption here is that all of this would push the price of gold higher. So Goldman Sachs isn't saying anything crazy. I think we can all agree with most of that. So most of this here is me just commenting on today's rate decision and Goldman's 2025 analysis. That analysis makes sense to me. I don't have any real argument against any of their price targets, any of their reasons for them. Now, it makes sense, give or take, right now anyway. We can see what's happening today. We know the rally took a break in the election news. We can't see what's happening next year. Now, the price, of course, is going to play off whatever hits in 2025. Maybe we get a chaos grenade, maybe we don't. But today's news gives us a pretty good example of how you can expect one thing and get something else entirely. Now, I watch price action closely like this just to track likely outcomes and try to stay ahead of any big changes, maybe line up some purchases with dips like we're seeing right now. Now, none of this changes the fact that gold is a long-term asset, and watching intraday price swings really only makes sense if you're trying to save a little bit on your next purchase. Now, today's news might seem like a shock, but trying to forecast Fed rate decisions before we know what impact the new administration will have is probably a great way to be wrong. I'd say this is more a case of a seemingly big change in course based on what we're seeing happening in real time that probably doesn't signal much change long term. Still, though, it makes for a really good sale if you happen to be buying. So let's call it good there. Let us know what you think. Are you happy to have an unexpected dip in price, or are you just watching from the sidelines? Let us know. And then while you're there, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.